Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here. I'm John Sneisen, and as we've gone into so many times before, the stock market is going to plunge. I mean, there's no stopping it. It's going to happen. The level of manipulation is absolutely out of control, or actually I guess some could say it's in control, and that's a problem. And just recently we reported on the fact that people like none other than Dr. Ron Paul, who's actually going to be on the program again soon, said that he believes a 50% stock market crash is very much imminent, going up from his original prediction of 25% because things are out of control. Back in August 27th, 2017, we put up a video on the massive stock market crash is imminent as investors pull $30 billion out in 10 weeks. And it just gets more out of control as you go and look further into it. John, you've done a significant amount of research into this recently. Can you go into what you have found?
Well, what I find is, of course, the markets are heavily manipulated. And one of the main reasons, for all the hikes, and we see record highs in stock market upon stock market all around the world, is cheap money, number one. And number two is the intervention of, for example, we talked about just recently the Norwegian Sovereign Wealth Fund and other wealth funds.
Which it basically owns everything.
Yeah, those sovereign wealth funds and pension funds buying up and, of course, looking at increasing their amount of equity holdings. And they're used by the central banks that usually controls them to prop up their local stock markets. Now, I'm going to go into some numbers that's going to scare you about Norway.
But before you go into that, John, I just want to quickly mention something, full disclosure on this, because people will always comment about it. This has nothing to do with Donald Trump. This has nothing to do with the presidents, prime ministers. This stock market is based in the banking system, the central banking system.
Well, it's based on fundamentals.
Absolutely. And this has, the president could say something and make the stock market go up a bit. Yeah, it looks like we're at all-time highs in this area and that area. That's where all the danger is. So, John, you can continue.
Well, as I said, the problem is the people who are propping it up, like the sovereign wealth funds, pension funds. Then you got central banks blatantly buying stocks, like the Swiss National Bank has been buying the major U.S. stocks, as an example. All of the big guys are, working together to manipulate the markets and keep them upwards. Now, there's other players too. There's the big companies, the big corporations are also propping up their own stock prices by doing what's called a share buyback. So they go out to their investors and then buy back their own shares. And as they buy back their own shares, their share value goes up, and they can, claim that they're making a lot of money, which they are usually not making that much money. It's driven by debt on the one side, for them in order to be able to buy back that stocks. I just have some numbers from 2016 that I'm looking at in a Market Watch article here. Just to give you an example of how much it was earlier on last year, it was about $589 billion on the S&P 500 companies, $589 billion in share buybacks that happened. So that was corporations buying back their own stocks. So what happens when they buy back their own stocks? Of course, these guys are keeping the stock market up. We're going to record highs. There's cheap money, pushing the market forward. Now I'm going to go into a couple of things that you have the PE ratio, which is what's called the price earnings ratio. So it's the price of the stock versus the actual earnings that it has. So I'm going to give you some very interesting and a little bit scary numbers. Now first, I should show you a chart that gives you just a view over the historical scale of the ratios.
And this chart is coming from Mike Maloney, of course.
Yeah. So what Mike Maloney went into here, he's looking at what the price earnings ratios are and how are the price earnings ratios versus when the stocks crash, when they go up and so on. And what he's found is there's usually when the overvaluation happens, on the average is between 12 to 15 in PE ratio. That's when it's starting to get in overvalued territory. Now, it was crazy back in 2008, and it hit like a massive historical high of 122.39. It never happened before. Usually before it was at in the 20s, the overvaluations. And in the dot-com bubble, which was massive, it was only 40. Well, what that was driven by that was, of course, again, debt. That's the big trigger here that are creating all the availability of propping up these markets and making them completely unsustainable. And you see it's just this crazy crash.
Well, before you go into the more numbers, John, as I always mention, I just wanted to put this into context. You know, when they shove you down a bottomless pit of debt, you're forced to ask for a ladder up from the government and the banking system, which puts you in perfect servitude to the government and the banking system. And this is exactly where they want you. Debt equals servitude. A populace in debt equals a populace in servitude. And this is why we have to watch out, because we're on our own. So many people depend on the government to be able to manipulate us into prosperity, when really they manipulate us into oblivion and they shove us down that pit. And we all think that everything's fine and dandy until we lose everything we've ever had, everything we've worked for. This is why this is so incredibly important, John.
Oh, it totally is. Now, of course, the crash in 2009, the peak was at 122.39 in PE ratio, and it went all the way down to about 13 in PE ratio, which is just in overvalued, in regular territory.
Yeah.
Right. Now, of course, they're up again to record highs, and I'm going to give you examples from around the world. And we got the first country at the top is the Italian stock market at 29 in points. Then Norway, then with 27.4. You got the United Kingdom 25.6, Switzerland 25.3. Denmark 24.6, and Belgium at 24. What you could see though, if you go down the whole line here and look at all of these numbers, you actually see there's a lot of stocks that are overvalued in most of the countries around the world. There's just a few stock markets that are not in overvaluation yet.
So, John, what happens when, I guess you could say, these stocks meet their maker?
Well, what happens is you get to a point where everybody's in one market, right? Mm-hmm. Everybody's doing the same trades. Everybody's going after the same thing because that's what makes massive amounts of profits. Mm-hmm. Now, you can do that until a certain point, but when the sell-off starts happening, all those people are wanting to rush out at the same time. And you might be able to buy, and more people getting involved. But when the sell comes, everybody wants to have profits, right?
Well, let me actually make a mention of someone, a good friend of ours, Jeff Berwick, during the dot-com bubble, and he showed that it was minor compared to 2008. And this is going to be way bigger than 2008, what we're seeing on the horizon here. Jeff Berwick of the Dollar Vigilante, before he educated himself about all these issues, he started Stockhouse.com. And now Stockhouse.com was massive in the 1990s and into the early 2000s. And then the dot-com bubble hit. And he went from, I think, $230 to $250 million to about nothing. No one wanted to buy it off him. It was a calamity that it was absolutely epic. And he lost basically everything. Mm-hmm. Then I think he picked up our other good friend, G. Edward Griffin's book, The Creature from Jekyll Island, learned about all this stuff, and it led him on to this massive long
figure out there was something behind that stock crash, and that was the Federal Reserve.
And he always says, why didn't I read this book before all this happened? It would have saved me a couple $100 million. Yeah. But I mean, this is the reality, and that was minor, like I said, compared to what we are about to see.
Yeah, and when you look at the companies that are doing this, it's of course the big massive companies that are constantly, they recently, like Apple and others, put up massive earnings. Well, the biggest buyers of their own shares are Apple, their GE, Pfizer, McDonald's, Microsoft, Boeing, AIG, Express Scripts, Walmart, Johnson & Johnson, Oracle, Alphabet, CVS Health, Disney, Wells Fargo, Visa, JP Morgan, Citigroup, Goldman Sachs, among others.
And I noticed something from that list that you just mentioned, John. It seems like most of these companies are either banks or they are completely subsidized or favored or regulated into prosperity by the government.
Yeah, so that's why they're using their share buybacks from cheap money that they're getting directly from the Federal Reserve.
And taxpayers too, like CVS Health you mentioned. I mean, that's taxpayer money going into the pharmaceutical.
Well, good luck getting a loan on 0.05% or something from from the Federal Reserve. As a regular person, most regular people might get 6 to 20% loan, and then the returns are not that great. So that's what you see. Like, these guys are using the system. They're taking huge advantage of the system, And as you see, it's happening all around the world, like simultaneously. There's massive ultra bubble, and people have said it, especially Mike Maloney, Jim Rickett, a whole bunch of other people. They're talking about the bond, the stock, all the things are starting to get into bubbles. Now they were also talking about Bitcoin, starting to look like a little bit of a bubble, but I think Bitcoin still has a lot to go before it comes into a bubble.
Bitcoin's decentralized, of course. It's not based in like the derivatives, and
but
all
it's
that
still an
nonsense.
asset commodity that could,
Absolutely
still be traded and sold, right?
Absolutely, but of course, whereas you see a lot of centralization in the market and just unlimited amount of, for example, the fiat system, just unlimited amount of currency being printed, devaluing the debt and the inflation involved and everything, interest rates pushed just high enough, but it's going to drop into negative zone, all that. Bitcoin, of course, has a bit of a much different system. In fact, the opposite, where there's a 21 million cap by the year 2040.
Well, it's not manipulated like
application.
all the stock markets around the world, right? So
absolutely.
I think, as I said, Bitcoin has a lot more to go, but it will eventually be a bubble as well, unfortunately, and it will suddenly drop down. But Bitcoin is there to stay. Like, it's a system in itself, and it will be used
it provides a service, and I think you not that long ago went into the actual number of people in the world who've adopted Bitcoin, and
it's going to keep up, and
tiny.
It's tiny.
Yeah.
So as I said, like, everything ends up in a bubble, but necessarily because of the quality of what it is as an asset, as a commodity, as a currency. It will be used. So it's not like a useless bubble where you buy into tulip bulbs. Like some people try to measure it against tulip bulbs.
Bitcoin to the so-called cryptocurrency bubble, I really don't like to use it, but Bitcoin to the so-called cryptocurrency bubble is like Google and Amazon to the .com bubble.
Yeah, but again, like, it comes to that mentality when everybody's talking about Bitcoin. It's not yet by far, but when everybody's talking about getting into it, you got to remember, everybody wants to get a profit out of it, and then they will, trade out. So it's
the speculation is worrisome. But I mean, looking at something like Bitcoin versus the stock market, real estate markets, you look at the monetary system, all failing. Bitcoin provides something that people will rush their money out of the stock market, out of the housing market, out of
massive blow up in Bitcoin. Yeah, exactly. So. People are going to look for, where I'm going to find anything that's going to resemble anything of security. So they're going to go to gold and silver. And now, of course, with Bitcoin, guys, stop fighting about what gold and silver and Bitcoin is. Let's all them work together. Understand that Bitcoin it has a lot of more risk than gold and silver, but understand that they work like currency with each other to attack the current system.
And Bitcoin has much more profit too.
And
it's easier to trade if you don't want to have to be extorted for all your money from the government.
Yeah, as I said, go and secure your wealth with the gold and silver, and then you go buy and trade cryptocurrencies so you can make tremendous amount of profits if you know what you're doing.
Actually, I just wanted to mention one more thing involving Bitcoin. It was actually kind of funny because I think it was Tim Draper the other day made a comment about how in 5 years people who own Bitcoin will be laughing at people who still own fiat. Fiat is going, all fiat eventually reverts to its intrinsic value of zero, always has, always will, and this is no different. Going back to 1024 AD in China, almost 1,000 years, people have been fooled by this nonsense IOU debt garbage.
Yeah, they can keep on manipulating the stock market until it's like Dow is 50,000 points.
Mm-hmm.
It doesn't matter. They could just keep on printing money and shoving it into the system, and the stocks haven't changed too much in value. It's the amount of currency that are having to absorb that asset that has grown substantially. So I'm not saying that I can see they keep on manipulating for a couple more years up to 50, 60,000. But at that point, you don't want to be in the stocks anymore. You want to be way out of it, because that's when the big crash is going to happen.
Well, like Robert Kiyosaki says, don't invest long term in the stock market. Every school tells you to do that. Every government school tells you to do that. It's absolute insanity.
And I talk to salespeople, not financial. I can't call a lot of them financial. Some of them are a little bit smarter, but a lot of them are just salespeople, and that's the problem. They've just been told to sell a product and telling you that, don't worry about the ups and downs in the market. You just keep in for the long term. Well, the problem is, I asked them this question, and go and ask your financial advisor this question. You'll see what kind of reaction you'll get. I said, what about when I retire and we suddenly have a massive market crash and I need that money?
Yeah,
There's no
just
response.
silence.
Yeah. So I'm gonna go into one last thing, which we talked about debt, accumulating and all this share buybacks and so on. Well, there's other debt as well involved, which is the margin debt. The margin debt is like a line of credit that you have on your stock portfolio. So let's say that your stock portfolio grew from 100,000 to 120,000. Now you can actually take out a line of credit, margin debt on that stock portfolio, another 20,000, go out and buy more stocks. So you can kind of see where it is, incrementally starts to get bad. And as you can see on the charts here, when you saw 1990s all the way up to about 2007, margin debt was always lower than the actual share value. So it wasn't so widely adopted. Now, of course, margin debt just got into a massive euphoria. People were buying into a whole bunch of that in order to try to keep the stock markets up and alive. But of course, it crashed rapidly down in 2009. But now you've seen the driver is margin debt is actually driving the whole market, and it's keeping driving it up. And you can see it's about 560 billions currently in the New York Stock Exchange that they have in margin debt, which is a very, very, very substantial amount. That's bigger than a lot of countries out there. Now I'm going to just show you another chart that will tell you what have happened with margin debt, and you can see this is numbers from back in 2015. You can see them. And also all the way to today in 2017. It goes all the way back to 1995. What is interesting here is you see that there's been a massive diversion in the amount of margin debt accumulated versus the stock value increase. So they need more and more and more debt to prop up the system, and that's what happens in governments and everywhere. You just continuously need more and more and more debt to pay off the old debt. And more debt to keep a value of something. The thing is, when you invest debt in something that doesn't really produce, like the stock market, or a government goes into a massive amounts of debt that doesn't produce very much, they say that, we're creating for infrastructure and all this. Problem is the government is increasingly spending more and more debt, but getting less and less of a return, and it's in the negative usually, what they get in return from what they invest. So it's a terrible investment usually, getting into massive amounts of debt on most investments, unless you know what you're doing with that money. So
does the Federal Reserve know what they're doing when they're buying up massive amounts of debt?
Well, they have to buy back that debt. They have to keep it on their balance sheet in order for the banks to keep afloat, right? And the whole system. So we're just in a massive bubble here. What you saw here is all the numbers, all the debt, the starting to quite overvalue the stocks and stock markets around the world, and it's just another warning signs that we're trying to show you here in order for you to understand. Now, of course, me and Josh are not advisors like these financial salespeople that
Keynesian
that knows everything and can tell you what to do with your money. So it's only our opinion. We gotta say that, or else the Securities and Exchange Commissioners comes and knocks on our door and puts us in prison.
Yeah, they want to be nannies so that you guys have to listen to a set point of view and can't diversify your view.
Yeah, and they said, you got a accredited investor, all types of different things you have to be in order to invest in good investments a lot of times. So most people have to invest in a lot of crap in the stock market. And so on.
John, finishing this off quickly because this video is going a little long, I wanted to ask you, finally, we know what's going to happen to people that are investing in the stock market. What's going to happen to those average people on the street that aren't investing in the stock market at all, have nothing to do with it, don't understand it at all? What's going to happen to those people when this stock market at a global scale comes crashing down?
I think most is going to be pretty regular, but then after a while, you're going to see people trying to look for selling off other assets, so it's going to melt down into everything. Where we said it's an everything bubble, it's debt, it's everything. So I foresee a greater, I call it, since 2008 we've been in the Greater Depression. It's just been manipulated over mass amounts of money being shoved into the system. So we're going to actually see real depression happening like in 1929, but it's going to be on steroids of what we saw in 29.
Because it's been pushed off so much, you can only force that beach ball underwater so long before it blows up.
Exactly. You're trying to push it further and further down, but as time goes, that beach ball gets bigger and bigger and bigger, and if it's at the same level, it's just more and more momentum, until it comes up. So you just got to make it understand that things are are going to contagion all over the place when the stock markets come down. People are going to sell everything they have. They're going to sell their debt. They're going to try to cover their losses, and people are going to panic. It's going to go into the stock market. All the retirees that have a lot of money in the stock market currently, they usually were in bonds. That was the old kind of school thing to do, but now a lot of them are in stocks because the stock markets are doing great and bonds have been doing terrible. So people have been moving over to a lot of more risk, and I see this whole event, when it comes down, it's just going to be very devastating. But if you position yourself in the right place and have security, as Jim Rickard said, minimum 10%, keep it in gold or silver, make sure you have that wealth insurance taken care of, and then also make sure you have your Bitcoin and cryptocurrency, all the different things that we talk about every single time.
Absolutely. Well, all I have to say is thank you very much, government and banking system. You always have our best interests in mind. We are so happy to be your slaves living on the animal farm. We got the grass to eat. We're happy, apathetic until you bring us to the slaughter and kill us. And we think, it's raining when it's pissed. So that's the way it always has been. It's the way it always will be, as long as we trust government and banking systems to rule our lives, instead of understanding that we must rule ourselves. We must be independent. We must be voluntary.
Yeah, we need to just get rid of a whole bunch of the population, so it's better for everybody. As Prince Charles and now his son, Prince William, I saw, was talking about that toxic idea of killing individuals in order for the betterment of themselves.
Idiots everywhere. Anyway, thanks for watching, everyone. We will be back with much more. Until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Thanks for watching, everyone. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized by the Anti-Defamation League on YouTube, as they flag all of our content as hate speech. You can also find our Bitcoin address in the description in the comments, as well as on the screen for you to scan if you please. You can also find me at Josh Sigurdson at steemit.com. That's steemit.com, the future of social media, as a dinosaur social media digs its own grave. You get paid in cryptocurrency, Steem that is, on steemit.com via the upvote of your posts. So I hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.